One of the biggest areas that I'm seeing trade and construction business owners falling down in is collecting money from their clients and customers. But the way that you invoice has a massive impact on the profit of your business. And so in today's video, I'm going to show you exactly what that impact is, how the small slip-ups around your invoicing can actually affect your overall income, and some ways that you can overcome this and start collecting cash much faster from your customers. For those who don't know me, my name is Bayley Peachey. I'm a client advisor at Trade Business Accountants, where we help trade and construction business owners to scale their profits and cash. And we make these videos, to be completely honest, because we want to help you make a lot of money from them. And then hopefully you'll apply to work with us to scale that even further in a lot less time. So with that being said, let's get stuck in. All right, let's face it, when things get busy, invoicing isn't always at the top of the to-do list. It can be very easy to put this stuff on the back burner. I get that, but here's the thing. For every day that you don't invoice your clients, you are literally pushing back your own payday, or even worse, you're actually pushing back the chances that you'll even get paid at all. Because the longer that an invoice is delayed, the stronger the chance that the customer is going to dispute the claim or not want to pay at all, or even go into witness protection, as I call it, where you never hear from them ever again, no matter how hard you try to get into contact with them. So not only are you not going to get your money, but you're also going to waste a lot of your time too. And what's that costing you? Think about all the time and energy and investment that goes into chasing and hunting down clients to just get paid for what you've already done, right? You've done the work, you deserve to be paid. So let's kick things off with 3 common mistakes that I keep seeing when it comes to invoicing. Mistake number 1, believing that because you deliver a great service, the client will automatically pay you. If you do not have clear payment terms and conditions that you communicated upfront with your client that were agreed upon in writing, and if you don't send an invoice, and it doesn't matter how good your service is, that money isn't just going to automatically find itself sitting in your bank account. It's not how it happens, right? So that's mistake number 1. Mistake number 2 is believing that the client knows how much is owed to you and will just pay the amount as promptly as possible. An invoice triggers the payment cycle. And so a client has no obligation to pay you until an invoice has actually been received. So if an invoice is not sent in a timely manner, then there's no guarantee that payment will be made on time. You can't afford to just believe that every client understands what's expected of them and that every client will be jumping to pay you as fast as possible on their own. You have to be on the front foot. And that brings us to mistake number 3, which is forgetting to send the client an invoice and working for practice. Guys, this is a huge one, right? If an invoice goes out days, weeks, or even months after the job is finished, then payment will be received days, weeks, or even months later, right? And if you forget to send an invoice altogether, then guess what? You're never going to see it. And I know this sounds obvious, but this is such a common problem that I'm seeing, probably far more common than you actually think too. And it's not like you don't know that you need to be sending invoices to your clients and charging for what you do. Like I was saying just before, half the time you get so busy that things just slip by. But I believe that we often need to be reminded more than we need to be taught, because running a trade business can be busy work. Yes, things can slip below the radar here and there, and it isn't always easy to be across this stuff. Yes. So this is your reminder to stay on top of your invoicing and stay on top of who owes you money, because no one in this industry should be in the business of working for free or playing for practice. You can go broke sitting on a beach, so why do it working your ass off? So invoicing should be done at the click of a button and not be some just annoying task that gets put on the back burner every week. And what I want to do right now is actually dive into the numbers, model out some different scenarios, and show you why I'm so passionate about this. All right, so on average, 5 to 15% of revenue goes uncollected every single year, which is a lot of work being delivered for free, right? Let's say that you do $1 million in sales, and just 5% on the lower end here goes uncollected, right? 5% of $1 million, we're talking $50,000. Now, you might be thinking, well, what's $50,000 when we're pulling in $1 million, right? Sometimes things happen in business. If I don't collect 50K, I can probably live with that. But let's break it down. Let's say that you have a GP, right? A gross profit margin of 25%. 25% of $1 million equals $250,000. That's $250,000 that should be your gross profit. But because of this lost $50,000, this uncollected $50,000, your gross profit is actually only going to be $200,000. So suddenly this seems like a lot of money now, right? Especially considering that the lost $50,000 that you didn't collect is actually 20% of your entire gross profit. Now, because we've lost $50,000 of our gross profit margin, 20% of our entire gross profit margin, to make up for that and get that profit back where it should be, we're going to need an additional $200,000 just to get your gross profit margin back. But here's where this gets really scary. Let's talk about how this actually impacts the bottom line, right? So say in the same scenario where you have the $1 million in sales and 5% on the lower end goes uncollected. Forgive my spelling and my writing. I know it's terrible, but 5% goes uncollected, right? Now, let's say you have a net profit margin, so a net profit of 10%. Considerable profit. That would mean that, 100,000 of this $1 million in sales should be your net profit on top of your salary. But because of the lost $50,000 worth of sales that we didn't collect, your net profit is not $100,000. It's actually only going to be $50,000. You've just lost half of your bottom line profit, 50% of your bottom line profit. Now, to get that back, and this is where it gets really crazy, you would need an additional $1 million in sales just to get your profit back to where it should be if you actually collected all of the money owed to you by your clients, which is just insane, right? You'd have to literally double your sales, do an extra $1 million worth of work just to get your profit back. That is literally insane, right? So that is a massive, massive impact to your bottom line profit. Your reward for actually running a business and doing this, taking all the risk and putting in all the work that you do, from just 5% of your sales going uncollected. And what we're talking about here, 5% of $1 million, 50 grand. To not collect 50 grand across 12 months of trading, believe me, this is a very probable scenario, right? That's why, again, the average is 5 to 15%. I went conservative here because hopefully that's believable to you, because I'm telling you, this happens. This is so easy to miss out on 50 grand. But in this scenario with a 10% net profit margin, which again, it's quite a solid net profit margin, you lose 50%. Half is gone. And to make up for that, doubling the work that you do, an extra $1 million. So you have to be a $2 million company to make what you should have if you did $1 million. Insanity, right? So you need to be collecting money much, much faster in your business, which comes down ultimately to how you're invoicing, because a sale only ends once money actually exchanges hands. I know an electrical contractor that at the time was growing so rapidly, but they weren't staying on top of their invoicing and tracking their receivable days, right? And as it turns out, he was so busy winning and delivering projects that he had over $700,000 that he hadn't collected over the past 2 years that he'd actually forgotten about. It was only until he dove into his accounts, looked at his receivables, and realized he'd literally forgotten about $700,000. So don't let that be you. We've just seen what the effect and damage of even a small amount of uncollected money can do to your business through this little example, let alone an amount of $700,000. So it doesn't matter how many sales that you do or what annual turnover that you're pulling in if cash isn't hitting your bank account. So with that being said, let's dive into some ways that you can actually fast track the rate at which you are collecting cash from your customers to really just increase the chances that you actually collect it all, because I don't want you to be the business owner that doesn't collect all the money. You've done the work, you deserve to be paid, right? So first of all, let's start with what is already outstanding. Use your accounting software to generate a report of what money you have outstanding and who owes it to you. And then all you need to do is change the settings to rearrange that list in order of most overdue, and then start the follow-up process. Call an email, call an email, call an email, call an email, and start chasing those payments. Hunt down the money and collect what is owed to you. Then redirecting our focus to incoming work, communicate your prices and payment terms up front. This links back to the first mistake that I was talking about. Whether it's hourly rate, it's quoted, inclusions, exclusions, whatever it is, this is all about educating our customers and our clients on how we do business, right? And most importantly, what do you expect from them? You need to train your customers on how you operate. It's your business. You need to set the terms wherever possible. Also, make sure that you are getting approval and a written signature before starting any works, which goes for variations too. Stop doing variations before you have a written signature. I could give you nightmare after nightmare, horror story of contractors that think they have a good relationship with their client, whether it's a builder or residential, whatever it is. They go ahead, they do something that the client's spoken about, they complete a portion of work, and then as they complete it, the client pretty much says, I don't know what you're talking about. They don't pay, they lose out on 20, 30, 40, 50, 80, 100 grand because they did a variation without written approval. This is a huge one. I've seen people almost go under, have ridiculous payment terms with different suppliers, and debt built up there because they couldn't pay back the materials and also couldn't meet their tax obligations. So they're on a debt treadmill with the ATO. And at that point, with that much mounting debt from one slip up of a variation, they're just sitting ducks, right? There's not a whole lot they can actually do. And it's just the most grueling and painful process to try and get out of that. So I don't recommend that for anybody. So make sure that you are, one, charging for variations, actually charging for variations, and two, not completing anything until you have written approval, written signature, written go ahead, not just verbal, guys. Now, also get a deposit wherever possible. I know this isn't always possible depending on what you do, but really you just need to aim to reduce what you need to collect from a customer once you finish the work and just speed up the rate at which you're collecting cash. That's the point here. In alignment with that too, take payment on completion. And if that's not possible, again, just aim to shorten the payment terms. Get them down to a 7-day count. Do what you can. And I know some of you listening might be working with builders, right? So if you're working with builders and you're on 60 or 90-day payment terms even, what you want to do is make sure that you're crystal clear on how their payment system operates, right? So that you don't get caught out with something as simple as not understanding their payment cycles and the dates correctly. Because if you're on a 30-day contract and you miss the deadline to submit your claims because of a small slip up and you're forced to wait another 30 days, that's just going to crush you. In alignment with that too, also seek to build a great relationship with the builder and the accounts person, basically anyone who holds the keys to the payment kingdom and is responsible for making sure you are paid, right? Now, circling back to the entire point of this video, invoice your customers as soon as possible. Too many contractors just aren't invoicing anywhere near as quickly as they should be. And another pretty daunting statistic that I can throw at you is the average time between invoicing a client and receiving payment in Australia is actually 44 days. So that's 44 days without cash that is owed to you, in some cases as best case scenario. So the faster that you invoice, the faster that you get paid, get the money in your bank account as fast as possible. That is the aim of the game, my friends. And lastly, follow up relentlessly. Let me say that again. Follow up relentlessly. I get that you are busy, you have lots going on, but you need to have a system in place to follow up and chase your money. You have already done the work, so you deserve to be paid for it. Don't just assume that because you sent an invoice, everyone's going to automatically follow your payment terms. Again, circling back to the big mistakes, the 3 big mistakes I said at the start of this video, you're going to need to have a system in place to follow up and collect what is owed to you. And you should be doing that weekly. Set aside the time, or even better, make someone on your team responsible for collecting debt weekly and reducing the amount of money owed to your business. Make it a weekly commitment. That is my advice here, guys. So with that being said, I hope you've enjoyed this video. If you have any feedback or questions, please let me know in the comments below. I'd love to hear from you. Stay on top of your invoicing, stay on top of the money that's owed to you by your clients, get that cash in your bank account much, much faster. Like and subscribe if you haven't already, and I will see you in the next one.